Hello, welcome to Boss Capital channel. My name is Michael Chu. In this video, we're going to talk about the big picture for the US stock market and for the week ending November 7, 2025. Here's a look at the Nasdaq Composite Index. After 30 weeks up, we had a really bad week. You can almost see that it may be the worst week since the rally started, and at least from a range perspective. It's a very big range. So last week, the week before, we had a really nice gap up and close really pretty high up there. And then this week we just basically came all the way back down and we are near the red line again. So that so last week after last week we were extended, and this week we pulled back to this red line. So now this red line is a 10-week moving average. Here's a look at the daily chart. So we have pulled back to this 50-day moving average here, the red line on the daily chart many times, very close to it, but this is the first time we actually touches it. Now on Friday, we did come back from the lows. Now we still close red, so technically, we're still in a pretty severe downtrend. You can see that slope is very steep. So it's common for us, for this pattern where it dropped really fast and then bounce back, and it will usually bounce back close to that trend line and get it tested again. So we need to be a little bit more patient and see what could happen next, right? So this 10-day is kind of sloping this way right now, and like I said, it's possible for it to come back up just a little bit and test, somewhere near the trend line. And if we succeed, it will, continue this V-shaped rebound. That would be ideal, what we want to see. If it fell, then we can continue this downtrend line along the 10-day, and it could continue to go down and break the 10-day line here. And once we break the 10-day line, then we look for the last support level. So like that here recently, and then we have right here, right. So there's multiple levels here. So those are all the support lines, and the last line of defense, because it's really low, very extended from it, is the 200-day moving average, the black line. So we don't know whether this will become more of a severe correction or whether this is the beginning of a bounce. Of course, we all want to see this market continue to rally, but again, they're just, so we had lots of earnings result the last 3 weeks, and there's probably more this coming week and so forth, but most of them have reported. And the thing is, most of them actually beat their earnings and estimate. However, even with so many stocks beating, the last time I looked was like over 80% of S&P beating their earnings. But a lot of stocks didn't react well, and that's a concern, because the reaction is always the key to understanding where the market is heading next. So for the week, Nasdaq suffered a pretty big loss, 3%. If it wasn't for the rebound, it would have been more on Friday, late Friday. Here's S&P 500, very similar chart. We had a nice week the week before, and this week we pulled back. Again, we did rebound off the red line. So that's the first good sign. If we continue to rebound and follow through, that will be really good. Here's the daily chart. We see the same thing. We bounce off the red line here, and it did end up closing just up 0.1% on Friday. For the week, it was down 1.6%. Looking at Dow Jones here, very similar, except it didn't really touch the red line, and then it bounced a little bit on Friday afternoon. So here we go on the daily chart. It's a little bit more clear here. So again, this one has came close to the red line, the 50-day moving average, many times. Again, here we're seeing a nice rebound. This is always, like I said, the first welcoming sign to see a bounce, right? So right here we see a reversal right here too, and then here we see a reversal the second day, like the next day, and then here we see a reversal on the third day. So generally, very soon, within 1 or 2 days, you should see the bounce. That's the good sign. If we don't see the bounce, then usually it becomes trouble. Now, with the other three index we mentioned, they all found support near or at the red line. This one, looks a little bit more worrisome, because here you see the trend line for the red line there, and we kind of came below it this week. And last week already, we see the other index all did well. The Russell didn't do well the week before when every other index did, and this week it just kind of fell apart and fall below the red line quite a bit. So on the daily chart, you can see it is somewhat below the red line just by a little bit. We have tested this line before. So here's one time, and then here's another one pretty close to it. Um, Here's another one pretty close. Again, this time we actually sit below it right now. So it looks definitely not as good despite the bounce on Friday. And again, the downtrend line is very steep right now. So we want to see if we can bounce out this trend line and hold above it for a few days. That will be really good sign. Yeah, just look at the equal weight Nasdaq 100 here. This one did fall below the red line here, so this also looks a little bit worrisome in terms of breadth for the Nasdaq 100. Here's RSP equal weight S&P 500. So this one actually looked a lot worse because we have been below all the moving averages for a while now, like many sessions here. So 1, 2, 3, 4, 5, 6, 7. And Friday, even though it bounced back to near the short-term moving average, now here's the trend line going down. So we come back above it and also surpass this red line here, then we have a better chance of recovering. But again, right now, this looks more like an L shape to me, which is a bearish pattern than a V-shaped pattern. So that's the difference here. So this is from the IBD newspaper. We're just looking at the bottom line here, advanced decline line for NYSE. Up here we have the S&P 500. So as the S&P 500 been pulling back for 7 or 8 sessions now, we can see the advanced decline line also coming down. So far it seems relatively pretty close to S&P 500. So as it also make new lows here. We did not make new low on Friday here, so that's a good sign. As well as Thursday. So it did bounce back pretty nice. So relatively it looks better in the last 2 days, like Thursday and Friday. Looking at Nasdaq Composite, again same thing. We have a Wednesday decline line at the bottom here for Nasdaq. Now this one you can see it clearly break, this long-term lows here, and we kind of keep hitting lows here. So from the Nasdaq 100 perspective, it's definitely a lot weaker because of this how this line has kind of come to new lows recently. And the index hasn't actually made new low yet, but the the Nasdaq Advanced Decline line already made new low. So here's the Innovator IBD 50 that represents the top 50 growth stocks. Now this chart looks really nice until this week. And the reason why it looks really weak because of this really wide and loose action here on this week. Obviously you can clearly see it broke the 50-day line here or 10-week moving average. So that's one thing. Second is look at how wide it is, like really wide. I mean, you would have to go back. Look at this one. This one was like right before the top in late March, I believe. Yeah, or April, early April. Yeah. So we're seeing similar wide and loose action, and this is usually not a good sign, especially after a rally has gone on for so long. This could be the start or beginning of a correction. So we want to be mindful of this. So this also indicates that the growth stocks are reacting more than usual, right? So even whatever the news may be, but they are reacting pretty negatively and yeah, substantially. Looking on the daily chart, we have tested the red line, the 50-day moving average before. Here's one time where it bounced back pretty much the next day. Here we same thing, we bounce back the next day. So right now the problem here is we are way below the red line, and again, very similar to the major index. Sometimes it come down really fast, which it did in 2 days. The slope of the 10-day is still trying to catch up, and the key will be to watch this line here as it comes near it. Will it surpass it as it bounce, or will it just get rejected and come back down, right? And if it does come back down, like the next support level would be probably closer to this black line here. 200-day moving average. There is a few support level right there, which is again coincides with the black line. And if we were to go down there, this would be more obviously a much deeper correction. Right now, it is at 10% for this index here, for this ETF, sorry. So yeah, 10%. I mean, this one it corrected 33%. So we are, if this is become a correction, this could be just the beginning, and we could eventually bounce back, and we could undercut the back line here, and so forth. Or the good news would be the growth stocks start to take a stand and start to hold and start to bounce back again. So that could also happen, right? So again, hard to tell where market is going, but that is the two possible scenarios here. So the 10-year yield this week is it tried to move out on Wednesday, but the yield went up higher, but it came back down by end of Friday. And here's UUP, the US dollar index here. So this one has been acting really strong recently, and Thursday and Friday it did pull back to near the 10-day. So we'll continue to see if this whether it will come back down or whether it will push up. The oil price also came back down here. It's now losing support at the 10-day, so that looks a little bit weaker. Gold price really having a hard time to try to break the 10-day here. It's starting to look more and more like an L shape, just kind of a bearish pattern. So if it doesn't go up, it could break and go down a lot further. So the red line is starting to catch up here. So that's the potential good thing is just need more time to digest its recent gains here, and then eventually come back on the right side. Silver looking very similar to gold chart. Copper has come back down quite a bit actually, and not only that, it actually didn't even try to bounce back to the 10 days so far. This is also looking very bearish, and copper could be a sign of the economy, and so that's not looking good at this time. It did that last time here too. It kind of went sideways for a little bit, but eventually it did bounce. And but this one, like I said, looks a lot weaker than even the last consolidation there. Here's the uranium nuclear ETF. This one also looks like it has started to look more like a correction now. It fell on the bounce here and then came back down, making newer lows. Right now it's below the red line, and so that is a dangerous place to be, to live under the 50-day moving average. So we'll have to monitor and see how. And there's probably lots of charts that look like this where stocks are starting to leave below the red line, and so we have to see how they behave. Usually you want to see a bounce really fast happening. If it is just kind of going sideways, that's not a good sign, especially the longer it is, especially if we keep making new lows. Here's the Bitcoin. The Bitcoin also has cracked quite a bit here, and found resistance there at the red line, the 50-day moving average, and then now we're starting to see resistance at the 200-day as well. So now it's four sessions underneath it. Whether it can bounce back, that's going to be hard to tell at this moment. And again, you draw the trend line along the short-term 10-day moving average. You see the slope of that downtrend line, and we need to come back at least to test and find support there. This is WenX Semiconductor ETF SMH symbol. Again, on this is one of the strongest chart, at least from the group perspective, and we see that last week it was quite extended, and this week we gave back some, not too much. It gave back 4.1%. We did not touch the red line, so that's a good sign. But still it did give back some, and we did bounce on Friday afternoon, and we did come back to near the top of the intraday range, and it's still under the 21-day pink line here, so right there. And you can see if I draw the downtrend line, it is very steep along the highs there, so it's normal for it to bounce back the way it did on Friday. But the real test will be as it come closer to that trend line, the 10-day. Is it going to find some support and pass through it and hold, or is it going to just get rejected and start coming back down again? because the next test will be the red line here. And of course, so this looks a lot better because it's still far above the red line, right? But yeah, and it's quite extended from the black line, so that's the problem right now. Okay, Nvidia weekly chart here. So we had this nice consolidation, and we came out the week before. Unfortunately, it gave back pretty much all of it, and also came all the way down to near the 10-week moving average, the red line. On the daily chart, you can see it better here, the red line right here. And it did bounce on Friday again from the lows and came back. The 10-day slope is still pretty steep here, and we can see it might come back to test 10-day and even 21-day around this level. So if we do come back up, that would be good. If not, we may continue this downtrend. Here's Broadcom breakout, pretty much fell, came all the way back to the red line. Again, Friday, it bounced, but it's still a down day. So yeah. So again, the downtrend line is pretty steep there. Here's look at AMD. AMD also starting to fall apart here below the 21-day. Again, the red line is not that far away. It could fall all the way there if it doesn't find support right away. Looking at Taiwan Semiconductor, also came down to the red line here. Right now it did bounce on Friday, so again, very steep slopes. Again, all these stocks are in a very steep slope downtrend right now, so it's better to let it play out and see what happens next. Looking at the software group, this one, has been consolidating. Unfortunately, the week before it couldn't come out, and then this week it just followed the market direction and fall apart. And look at how far it came below the red line here. It doesn't look good at all. This looks like it's falling apart. So here's the red line here, the 50-day moving average. Look at how steep this 10-day slope is and 21-day slope. And we might see some relief pressure here as it try to bounce back to near that line. But again, we're going to see how it get tested around that downtrend line. Looking at the big cap tech here, Microsoft, again, we fell on the breakout right here, the traditional buy point, but it came all the way back. Look at how many sessions were red there, and completely underperformed. Relative strength is just dropped significantly, and now we are at the bottom of this range now, testing that lows. I think we kept close to it. 492 is the low here. Here's Google, one of the better looking chart. We break out right here and we went up, and then we now pull back to the 10-day. This one looks really, really strong because while many other charts look terrible, this one actually holding up well. Just like all the way, sideways, and now with the 10-day has catch up, and even the 10-day slope is still pretty strong. So we'll see how this handles in coming days and weeks. Amazon also broke out here for a couple of days, and then it just pulled back now, and now we're seeing some support at the 10-day. Again, we still have this downtrend slope. So pretty much a lot of stocks are following the downtrend line, which is not a good thing, right? Again, until we see these stocks, and most of them, and not just one or two, most of them start to bounce back above that downtrend line, then we can say, hey, maybe a bounce back is just trying to take place here. Meta, this one has really fallen apart. I mean, there's nothing really good to show here. The last level was above the red line, and then we have the earnings news that really took it down. And from there, we haven't really come back to it. It's just continued this really severe downtrend. You can see the 10-day slope is just really steep. Next, we have Apple. I mean, Apple chart has been pretty strong overall. It's been finding support near the 10-day, 21-day, and right now, look at how tight this is trading. Look at this, the tightness. It just doesn't want to break to the low side, right? And it's holding really tight. This is really good action. Tesla, overall, Tesla is consolidating nicely here. Most of the time, recently trading in the upper half of the space. But it did fall back on Friday following the market. The problem with Friday, it didn't really bounce as much as you would want it to see. It's not even at the top of the range. That's probably negative from that perspective. So again, the red line is going to be crucial if we can pass that or not. Finally, we'll look at Netflix. Netflix starting to form an L-shaped pattern. This is very bearish pattern, especially if they keep making new lows. Now the 10-day slope is kind of coming down as well, so we need to see if we get challenged there, and then it may fall, continue to fall, or it may, have a very powerful bounce and come out of it above the trend line and hold. Again, that's the key there. Thank you all for watching. I'll be coming out with a second video for growth stocks list, and there's lots of stocks that have reported, so make sure you don't miss that one. I'm going to focus on the new list, and also talk about, how do we prepare for the next move. Thank you. Please like and subscribe.